What up, my people? This is
Oh,
Calvin from CMO TV. We got a very special guest today. Introduce yourself, please.
how are you doing, Calvin and everybody? My name is Melody Harris, and I am the Associate Director for Transamerica. Transamerica is a life insurance company.
Okay, all right, all right. I got a few little questions I ask you, Melanie. I
Okay.
guess the first one would be, what's the difference in between life insurance and what is that? Death insurance, I believe it is, or burial.
A
Let me say life
burial.
insurance, burial.
Yes.
Yeah, I think that's what it is.
Well, it's really no difference. Uh, the big difference is the amount. Most of the time, if someone gets a burial, they usually get a small amount that'll take care of just the burial, like maybe a $10,000 policy. Whereas it would probably be enough just to take care of the final expenses of the burial of a loved one. And on the other hand, when you say life insurance, it can be used for the burial as well, but it's normally you can get a bigger policy and get a lot more and have money left over to take care of other expenses that are left behind, because there are other expenses left behind other than just burial.
Yes, indeed. Yes, indeed.
Yeah.
Yes, indeed.
Yeah, and the
Is it
beneficiary,
anything
whoever the
with
beneficiary is, they can do whatever they want to with that money.
hmm,
Okay.
is it anything with y'all's company that will, let me see, deny you the coverage? You can get denied with the coverage.
Sure. Uh-huh. And that's we there's a difference, you can get what that you see might see people advertise on TV, guaranteed issue. That's the word, the terminology. We have that also. Guaranteed issue means they won't check your medical records. You don't have to qualify for it. Like Senior Life, that's a company that advertises on TV.
Yeah.
They guarantee the coverage, and I write for a company also. Gerber has a guaranteed issue policy, and they don't check your medical records. You're guaranteed to be approved. The only thing about it normally costs a little more, and they won't allow you to get a bigger policy. The most they'll usually let you get is 25,000. That's the most.
That's still a
From
lot.
Yeah, from 5,000 to 25,000, guaranteed. But the only thing about it is you have to live 2 years. That's where that 2 years come in. A lot of people say, well, the insurance won't pay unless you have it for 2 years. That's only on the guaranteed issue policies. You do have to live 2 years. And what will happen if you die before 2 years that you get the policy? They will give your family all the money back that you had paid into it. Plus, a lot of companies will pay you 10% interest on that money. So you will get all the money back that's paid plus 10% interest on that money if you die before the 2 year anniversary of that policy. So that's still good, because this is normally a policy that people that's already in bad health normally get when they can't get approved for just a regular life insurance product. Because other life insurance products where you can get 100,000 or 1 million, you do have to qualify health wise, and they
Hmm.
your medical record.
Oh, so 2 years. So if you end up dying 11 months and a half, you will get all that money back.
All of your premiums back. Every month that you paid, you get every dime back. The company can't keep it. It's against the law. The company have to give it to you. And they will. They will give you all of the money back. And my company, Transamerica, we even pay you 10% interest on that money. So you're going to get a little more.
Wow.
hmm So that's still
That's
a good
all right.
thing. You have a lot of people, they don't think, they'll say, well, shoot, it ain't going to pay into 2 years. I'm not going to get it. So they'll keep putting it off and putting it off. I mean, the way I look at it, if you go ahead and get your coverage, the best time to get it is while you're young and healthy. That way you can get as much as you want. And it's cheaper. But if you wait until you in your 70s and you're sick, it's gonna be expensive. It's gonna cost. So the best way to avoid that is go ahead and get the coverage while you're young and healthy. That way it's cheap. No matter what, it's cheap. And you can even get it paid up while you're young. You can pay it up for 10 years and you're done. You won't ever have to pay anymore. And you'll have a policy the rest of your life.
What you mean pay it up 10
Like,
years?
I'm going to give you an example. I have a lot of grandparents and parents. They'll buy a 10-year paid up policy, 20-year paid up, or 30-year, meaning the premium will be set where they'll have that $50,000 policy paid up in 10 years. So they'll divide that premium out, and the parent or whoever's paying it can have it paid up in 10 years. That means they don't have to pay anymore. After 10 years, boom, they get a certificate that $50,000 is good. It's there, and no matter how old that person lives, the company will pay that $50,000. As a matter of fact, I just wrote 2 for a lady in Boonville for her 2 sons. She's going to have their policies paid up in 10 years. She won't ever have to worry about it. And that's something you can do for peace of mind, that if you pass away, you can feel good knowing that your child or your grandchild has insurance coverage. Even though you're gone, the company will still pay that policy.
I'm supposed to have about 1 or 2 people on here with us to ask you a couple of questions, but it seems like they kind of like, got busy. Okay. My question is, why is it when it comes to life insurance, people kind of procrastinate on getting it and they hesitate on it, and then when your loved one pass away, now you're struggling, you patting your pockets trying to find out where you're going to get this from.
It's sad. I've seen it so much.
In your experience, why do you think that is?
Well, one thing I think is that people, they don't want to invest their money or spend their money on something they can't see, touch, or feel, or, it's not a tangible product. You paying your money every month and you don't see it. Most people feel like, they don't think that far, their mentality. They always put it off. They mean well. People mean to get it. They say they're going to get, especially when somebody in their family died and they say, man, I got to get me some life insurance. Because I bet everybody knows somebody that has passed away without it. And they be like, I don't want to be in that predicament. I don't want to put my family through that. I'm going to get me some life insurance. But they put it off. So that's why I tell my agents, we have a lot of work to do. We have to not wait for people to come to us. We have to come to them. That's not the first thing on people's bucket list, is to buy life insurance. It should be, but it's not. And so they'd rather buy a pair of Jordans or buy, get their nails and fingernails and toenails done. That feels good. That's something they can see. But, if you love your family, it's the last act of love that you can do for your loved one. That's the way I look at it. Having a life insurance product and having a life insurance policy is the last act to show that you love your family. That's what you can do when they get that check, that you cared enough about them not to put them in that burden, that bind of having to come up with money, and that you left them some money. You left them something that can help them out while you're gone, especially if it's somebody depending on you.
Yeah. I understand that. Now, excuse me. So how do the process go? Say if I had a loved one that I had insured. How do this process go, and how long will it take for you to get your money? Will your money come, say like I had someone pass away today, I had them insured. How will that process go on? As in, I'm gonna call you and be like, look, I had so-and-so pass away. I know I got them on the insurance and everything, so I need to pay people to bury them and all that stuff like this. So, unfortunately for me, I haven't had that happen, so
right,
I don't know anything about it.
Okay. Well, what we do is we have this happen all the time. A lot of times, when your loved one passed away, the coroner, if they pass away in the hospital, then the hospital will have the family member that's in charge ask, what funeral home would you want to come pick up the body? And so when the funeral home comes and pick the body up, whoever signs for the funeral home to take that body from the hospital, that's the person that's responsible. Number one, a lot of people don't know that. Number two, the funeral home will first question they're going to ask is, well, did they have life insurance? And so you'll tell them, yes, I have a policy on them with Transamerica. And so the funeral home will call us. They'll call us, and then they'll just ask and verify, do that person have an active policy? And we'll say yes. And so the funeral home will be gracious enough to go ahead and take care of the final arrangements because they know they're going to get paid. Because what we'll do is we'll go ahead and do the paperwork. We'll call you and we'll do the paperwork. The claimant, which is the beneficiary, will answer all the questions. The questions is nothing but just the person that is insured, their birth date, got to verify, make sure all that stuff is correct. The birth date, the date they died, how did they die, and then we're going to ask you, what funeral home are you using? And have you paid the funeral home? If you have not paid the funeral home already, then we'll send a check to the funeral home, and then the balance of the money we'll send to you. But if you say, no, I've already paid the funeral home, then we'll just cut that check and send it to you. But we have to have that death certificate. And since
that you would do it that week of the death?
Yes.
And see, the reason why I asked
it's just that we have to get the death certificate before we send the check. That's what I was going to say. Since COVID, I know in Mississippi, they've been very backed up in Jackson. And we've been having to wait on the death certificate because we can't print your check until we get that death certificate, because the death certificate is going to tell us the exact manner of death. So you got to have the death certificate. And most of the time, the funeral home can get it quicker than you. So the funeral home will take care of that because they want to get paid as well.
Yeah.
And they know they're not going to get paid until we get that death certificate. So the funeral home normally can get it quick.
Oh, okay.
So you get that from the Bureau of Vital Statistics, just like you do a birth certificate. Same place you get your birth certificate, that's where you get the death certificate.
Okay.
Now, as soon as we get that death certificate, that check can be mailed to you within 7 to 10 days.
All right. Now, I guess one of my big pet peeves would be, how do you cut costs keep your costs down?
That's a great question.
On a funeral like that.
Yes, I'm so glad you asked that question. From experience, I found out, because I never knew this, that the biggest expense, the biggest way the funeral home make their money is on the casket. Please be mindful that that's how they make their money. They're not trying to be malicious or trying to do something unethical, but that is the biggest expense. Now, there is a rule on the books that a lot of people don't know about called the funeral home rule. And that rule was put in place by President Theodore Roosevelt way back then in the 1940s. The funeral home has to give you a price list. They don't hardly do it, but if you ask them for it, they'll have to. They got it on hand, but nobody never asks because people don't know. But you ask them for a price list. You have a right to pick everything you want. Now, back in the old days, people didn't have cars. So funeral homes would get those limousines and the family cars, send them to your house to pick the family up, transport you to the church. All of that costs money. So nowadays, everybody has a car. So really, the only car should be on your bill is the hearse to transport the body. So you can tell the funeral home you don't need a family car. He's going to ask you, where should I send the family cars? How many family cars you want? You can tell them we don't need any family cars. We're going to drive our own car to the service. Now, if you want to be chauffeured, that's going to cost. So you can cut down costs by letting everybody drive their own car in the funeral procession. The only funeral home car that should be in the procession is the hearse, and that's to transport the body. So you're going to pay for transporting the body from the hospital to the funeral home, or transporting the body from the house or from wherever that person passed away at to the funeral home. And you're going to pay for them preparing that body for burial. That's the embalmment. You got to pay for that. And the other thing you have to pay for is the transportation of the body from the funeral home to the church or to the cemetery. And then the opening and closing of the grave. That means whoever you get to dig the grave. You don't have to use the funeral home service to dig the grave. You can get your own people that you know to dig the grave. I know back in the day, my daddy and his brothers, they would always dig all the family members' grave. They did it like by hand, but now they have the equipment to do it. So if you know somebody with that equipment, I know a guy that lives in Ripley has that equipment, and he'll do it. You know, you can find somebody that to do it cheaper than what the funeral home charged to get it done, because they're gonna get their little cut out of it. So there's ways to cut costs down. The main cost though is the casket. They'll say the casket is special made and you want a special color, you want this, you want that. But really all the caskets are made by the same company. They're all the same. And if you're gonna put your people's casket in a vault, there's no need to spend a lot of money on the casket. It's gonna look the same, it's gonna be shiny, it's gonna be whatever color you pick, and it's gonna look the same. It's gonna hold that body. But if you put your people in just in the ground, I thought that was against the law. I thought that they had a law where you had to have a vault. Somebody said it's not the law. And I personally went to a funeral in Pontotoc and they didn't have a vault. It just freaked me out because I thought that because the weight of the earth, once they put the dirt on the casket, it's going to crush that casket. So I would recommend putting your people in a vault so that the casket won't get crushed with your loved one inside. So if that's the case, you don't have to spend a lot of money on a casket because that steel vault is going to hold the weight of the earth and the casket will stay intact.
So do the vault cost an arm and a leg?
It comes with the casket. It don't really cost it don't cost that much. It don't cost that much. A steel vault does not cost that much.
So
it's going to be included in that cost, but when you get
mainly just the casket that they charge.
Yes.
Is it another way about buying a casket other than from?
Oh yes, you can actually order your own casket. You can order your casket from Walmart. Walmart.com. They got caskets. All you do is search, and they will deliver the casket, shipment free and everything to the funeral home of your choice. And the funeral home has to accept it. They have to let you use your own stuff. You can bring your flowers out of your garden. You don't have to purchase anything from the funeral home. You just pay them to prepare the body for burial. But a lot of people don't know that.
But they can't turn you down for not using their
stuff.
Yeah.
No, sir. They cannot.
We've had
people.
If anyone had the problem or anything.
I knew
it. If they refuse to, what's the repercussions if they refuse to use your?
I've never heard of anybody refusing, but they can't. I mean, it's really a federal law, but people just don't know about it. It's called the Funeral Home Rule, and you can make a complaint, to the State Department. You can make a complaint, and they'll be in trouble. They'll probably be out of business. So they're not going to take that chance because they know that's against the law. There are rules and regulations to burial, so they won't refuse. That's one of the rules they learn. Just like me, I'm a licensed agent. I'm bonded. I can be sued. I have an E&O insurance that I have to pay every month, to take care of lawsuits. And funeral homes have this. They're under the same law. They're governed by the state. Yeah.
Wow.
You can reach out to your state insurance commissioner for problems with funeral homes and any problem with an insurance company. You can reach out to Mike Cheney is our commissioner for the state of Mississippi. He's in Jackson. He don't play. And so there's no ifs, ands, and buts about it, about the integrity and the ethics that goes along with insurance and funeral homes. They have to follow the rules or they'll be out of business. They'll pull their license and they won't be able to practice.
How about other than life insurance, and what else do y'all? Well, I think it's all y'all would sell as life insurance though. But what other plans do y'all have? We
sell disability, dismemberment. We sell long-term care. Is a big issue that a lot of people don't know about and don't think about. Long-term care is like nursing home care. Health insurance do not pay for your loved one or pay for you to go into a nursing home facility, assisted living facility. Your health insurance don't pay anything on that. They may pay 1 week on the first floor of the hospital that you need rehab, and that's it. They'll move you out to a skilled nursing facility, and you got to pay for that. That's going to be your out-of-pocket expense. If you in a bad accident or something, and you need more rehab than just that 1 week that your insurance pays for, you're going to be on the hook for that. But
So what's the name of
Transamerica,
this plan?
well, it's called long-term care because it takes care of long-term care. So I said, well, what is long-term care? Long-term care is mostly chronic illness when you can't perform 2 of your 6 activities of daily living. Those 6 activities are bathing yourself, feeding yourself, dressing yourself, getting in and out of bed, in and out of your car, going to the bathroom, even knowing that you have to use the bathroom. If you can't do those things on your own without assistance from a person or a walker, a cane, or a device, diapers, catheter, then you're considered chronically ill, and that's long-term care. If you can't do 2 of those, then you are considered, chronically ill, and that's where our plan would kick in. And we have a life insurance policy that will pay for that for you.
When do you start paying for something like that? Before or during?
Oh, definitely before. If you got that
I would
problem
have to
now,
start
you can't
getting that
qualify.
now.
You already
What you
have
say?
that with me.
Oh, okay.
That's
I
what
didn't
you
know
have
that.
with me. Yes, that's
I didn't
included in
know I
your
had
plan.
that though.
That
I don't think
plan, that's the best plan. I call it the best thing since sliced bread because Calvin, it'll take care of everything. If you get cancer, if you get any critical illness, like have a bad car accident where you end up in ICU, anything in ICU is considered critical. Heart attack, stroke, that's critical illness. Chronic illness is if you get out of the hospital and you can't walk or you go blind. Anything like that is considered chronic illness. That's why your policy will kick in again. And we'll let you use 90% of that money that you have. And if you have to go to a nursing home facility, we won't make you sell your cars and your house. Because a lot of people, they go to a nursing home facility, if they got all this property, Medicare, Medicaid, no matter how old you are, they won't pay if you got property. They're going to want you to liquidate it, sell it, give that money to the nursing home. And when all that money gone, then Medicare, Medicaid, the state will help pay for it. But not as long as you have assets. So this plan that you have help protect your assets. If you have do you still have your motorcycle?
Yeah.
And so a motorcycle, that's an asset. And so they'll say, well, you don't need that. You got to go to a nursing home facility. We want you to sell it. And the money's got to go to the State Department in Jackson. And they're going to give it to the nursing home to pay for your care. So you might want to leave your assets to your boys. You might want to leave that as a legacy to your children when you do pass away. So why would you want to sell it? You don't want to sell it. So we try to tell people you want to protect your assets by getting this plan. And this plan has long-term care included. So you're protected. They'll ask, do you have a long-term care plan? You'll say yes. So all your assets will be off limits. You won't have to sell your stuff unless you want to sell your stuff.
That if somebody want to sell my stuff, unless
Right.
I had to, and I know that I don't really want it.
But you don't, right? You don't want someone making that decision for you. You want to make that decision on your own.
Okay. So what do you have? What would you request, or not request, recommend young men and young women to do when they have a child? Having a child.
Okay. Well, the same plan that you have, we can write it on children. I recommend them to get a policy on their babies once they turn 6 weeks old. And for one reason is because children later on, they may develop some childhood illness, some dreaded childhood cancer or childhood illness like type 1 juvenile diabetes. No insurance company will cover them if they get diagnosed with juvenile diabetes. And they normally don't get diagnosed with it until they're about 3, 4, or 5. My grandson was diagnosed with it. He was a little bit over 10. And so now we can't get any life insurance on him. Nobody will cover him.
Wow.
So it's best to get that coverage on those young children when they're young babies. That way they do have coverage. And you already have them covered. And it's cheap. It's very cheap. As low as sometimes $8, $9 a month. And that's locked in. You won't have to worry about it going up. So at least you know you got coverage.
And see, that was my next thing right there. I'm glad you kind of brought that up. But you hear, and I know you hear this a lot. I can't afford the insurance, cover myself in insurance. Mm-hmm. And I tend to tell people you can afford it if
Mhm.
you have discipline enough to, okay, I'm gonna take $5 off this 6 pack and
Exactly.
put to my
Life insurance.
insurance.
Yeah.
Yeah, exactly.
It's about priority. Priority. It's not a high priority for them, but they need to think about it and make that a high priority. And that's what I say about love. It's the legacy of love. You know, a lot of people they want to fight you. I mean, you would have to literally fight them if you say you don't love your children. They will be mad and
Yeah,
curse you out, and you got to
yeah,
fight them if you tell them
yeah.
that. But love is not just lip service; it's about action. You know,
Really,
so
huh?
that's you got to show action. You know, you got to something you have to do. But yeah,
I agree with you on that. I agree with you on that 100%. No, I know.
yeah.
I see two people in the chat room, and I want y'all to hit that like button. Now, don't come in here, kicking my furniture all over. Wipe your feet when you come in.
There you go.
Hit the like button. Hit the subscribe if you ain't subscribed yet. And if you got something to ask, go ahead and put it in the chat. Ask them anything. There is no dumb questions.
No,
Only dumb answers, I guess. I don't know what's the name of that.
no,
Anything
no,
else
no
you
dumb question.
could you tell us that about insurance?
Well, I always ask a question to those two people in the chat room. I hope they can hear me. Ask yourself this question: if you died unexpectedly, I mean, like if you died tonight, would your family be able to maintain their current lifestyle without your paycheck? That's a question.
Mm,
You know, if you died
mm,
unexpectedly, would your family suffer? Would they be able to pay all the bills without your paycheck? Because your paycheck is gone. You're not coming back home. You're gone. So the money you make, the money you contribute to the family, would they be able to? Even if you're a stay-at-home mom, what you do for the family is priceless. Your husband
mm,
or whoever's going to be left behind, they're going to have to pay somebody to take care of the kids. They're going to pay somebody to cook. They're going to pay whether they go to Burger King and pay, whether they have to take the kid to a daycare, they got to pay. It's going to cost money. So you can't put a value on what you do, even if you're just a stay-at-home mom. Because stay-at-home moms, like I say, that's a priceless job. Nobody can put a value on what mothers do. So I always tell, people say, well, who's the breadwinner? That's the one we need to have life insurance on. No, I tell my agents both spouses are important because both roles are important. You want to protect that. So if some people have life insurance on their job. Some people have life insurance with State Farm or with Farm Bureau with their auto insurance, but it's not enough. Because I know P&C, which is property and casualty companies, they can't write what we write. They can't write millions and millions. They can probably get you a $50,000 policy to bundle your home and auto and make your auto insurance low. But that's not enough when you got small children that you want to go to college, or you got a mortgage, you just bought a house. You don't want your family to have to move out of the house and move in with your parents or move in with your wife's sister. Even though family will let you move in for a little while, people get tired of you. You can wear your welcome out. And no, I know I don't. I never have moved back home and don't ever want to. I don't ever want to have to live with someone, and I don't want nobody living with me. So everybody needs their own place and their own space. So that's one thing you want to look at your mortgage. How much more do you owe on your mortgage? If you died unexpectedly, how much would it take for your spouse to pay that mortgage off? That's how much life insurance you need. If you want your children to
mm.
go to college, you need to add a little bit more life insurance to that. Everybody don't get a scholarship, and you might not want them to be burdened down with student loan debt. So a life insurance plan is the key to creating generational wealth, creating a legacy. I mean, hey, other races have been doing this since the beginning of time.
Since the
Even the
beginning.
Bible says uh, a wise man leaves an inheritance to his children and his children's children. We don't have a lot of land and stuff. Some of us don't. So one thing you can do for your loved ones is leave them a life insurance policy. Yeah, leave them a life insurance policy. I always think about Master P. If y'all know who Master P is, the rapper from New Orleans, his grandfather died, and he had Master P, Silk, and their other brother, C Murder. He had all of them the beneficiary. They all split it. They all had $10,000 apiece. So I don't know what the other two did with their money, but Master P started selling T-shirts and his CDs out of the trunk of his car. Now he's a millionaire. You know, he may be a
Yeah.
billionaire. But
Damn near billionaire. As much
yeah,
as,
he's got money. But he started with that $10,000 life insurance policy. That's
Wow.
what got him started. A $10,000
Wow.
life insurance part. So
Damn.
that's a legacy. His granddaddy loved him. So that's what love does.
That's what love does. Whenever you leave them, that's
Mhm.
what it does. So tell me about the policy about the kids and what benefit that you can get out of that. Say like I've been trying to get my son to do something for his daughter. I said, I told him we're gonna put her on this insurance. We need to, first, go through our DNA or whatever we need to do or whatever. Find out that she yours, and let's go ahead get her set up on this insurance plan, because I remember you telling me about the plan and how it is and how it can benefit her.
Yes.
Yeah, through her life and everything.
Exactly.
So tell them
doing it while she's young, it'll grow interest. We pay 15%. That's our cap. That's cap. That word in finance means that's the most we're gonna pay, no matter what the stock market's doing. We'll pay 15% interest, and we have a floor. That's the bottom, because the stock market goes up and down. So when the stock market is down, we're still gonna pay our floor, which is 0.75%. So every month that he makes his payment, we're gonna be paying, and that money is just gonna be adding up. It's gonna be adding up for her. And so after a good 10 years, or it could be less than 10 years, if somebody, whoever the owner of it is, want to take some money out of it, you have that right. You don't have to be sick. There's no, you could just be for any reason. If you want to take some money out of it, the money will be available. If you saving it for her at a certain particular time in her life, then don't take the money out. It'll be even more money. The longer you leave it in there, the more that money will compound and add up. And even when she decides to take the cash value out of it, it's still going to be growing. And she's still going to have that death benefit that if she did pass away, it won't leave a burden on anybody, because it's a life insurance. And the good thing about that, the money that you take out, you never have to pay taxes on it, because it's connected to the death benefit. The government.
Well, how is it they get to take money out of theirs?
How is the kids?
Yeah, how is it the child, if they want to do that, how do they get to draw money out of their insurance?
It's the same way. The good thing about it is, you as the parent that set it up, we got something we call an IPO, income protection option, and you can set it up how you want that money to be distributed. You can set it up, because that's what it is. This plan is it's like a retirement plan. It's a index, and that's an investment. It's not just life insurance. It has life insurance connected to it. That's a good benefit, but that cash value that adds up, that's money. That's your money. That's money from the money you paid plus the interest. And when you want to get it out, you being the owner, since she's a child, she's a minor, so she can't pull money out until she's of age. Now, once she's of age, 18, when she's 18, she can. But until then, the owner is over it.
Damn it, like it sounds like it's right there. So, but I still didn't get somewhat of an answer what I'm looking for. I'm trying to see how is it that child get on that insurance claim policy or whatever.
Right. This is
they can pull money from out of there.
Yes.
And I'm trying to see how is that when if I try to pull some out of mine, I can't pull none out of mine unless it's something to do with
a critical illness. I see what you're saying.
Yeah.
You can. You'll be able to pull money out of yours also. It's just that it's going to be the surrender period with yours and with the child. You can't pull money the next day or the next year, because there is an accumulation period. That's the time that we're building the money. So this is not a short-term get rich quick scheme. No, this is a long-term investment, and the term is 10 years, 10 to 12 years. That's the surrender period. But if you overfund it, meaning that say for instance, if I say the premium you need to pay on this child's policy is $50, but yet you're willing to pay $100 a month, then that's overfunding it. So you can buy down those surrender years. Whereas instead of waiting 10 years to get money, you could probably get money in 6 years, like yours. If we overfund yours, you can start putting more money in yours if you want to. And that money will add up, and maybe in say in another 5 years, if you want to take money out, the money will be available for you without a penalty. Because if you try to take money out now, they're gonna penalize you, and you don't want that because you're gonna be paying.
No,
You're
I
gonna be
don't want
losing.
that.
Yeah, you're gonna be losing some of your money.
Unless
So
it's,
right now, we're not overfunding yours. We're just paying the amount to keep yours and to keep them paying you interest and to keep your death benefit active. So if you wanted to write a check and send some extra money every month in your plan, you can do that. And then when you do get ready to pull that money out, you'll be pulling that money out tax free. So we can look into how much more you need to overfund yours. I can look at that for you to see how many years we'll have before you can actually start taking advantage of taking some money out without being penalized. I can be looking at that for you.
well, no, I ain't trying to take nothing out. I'm just trying to see how is it. But you don't explain pretty much. It's an
Yeah.
offer.
Now, if something happened to you today, if something happened to you tomorrow, where you had to go in the hospital and ICU, and you in ICU for 6 weeks or whatever, you got access to all of your money right then, your death benefit, just like as if you had passed away. That money would go to your boys. This money, that same money, you got access to it. We would let you use. I just delivered a check to a gentleman here in Tupelo. He got prostate cancer. He's gonna be fine. He caught it early. He's had his last round of radiation, and he's been off work, so he wants some of his money. And so he told me he wanted 15% of it. Boom. I just got him 15% of his money.
So how would, if I was to get we'll say something happened to me, hopefully not.
Mm-hmm.
And I was to get 80% of that, right? I need 80% of it to do something, whatever, if I had cancer, some type of cancer. Mm-hmm. How much would I be leaving to my boys though? Because I would want to make sure
that you leave something to them. Yeah. Well, you got the
20%
still in there.
I know I don't sit there and took 80%, only left 20.
Right.
And see, that's going, all that 80% is really going to take from them, right?
Yes, definitely. So you're going to be taking 80%, not of where you started, because your death benefit has gone up because you've had yours a couple of years. So you'll be able to get 80% of what you have now. So that's what I love about this plan, because the death benefit goes up every year, but the price never goes up. So if you want the 80%, you'll be leaving them the 20% of what's in there. If you wanted them to have more than that, then you would have to take less than 80%. But the good thing about it is, after about 4 years, depending on what your condition was, if it was cancer and after 4 years of being off treatment and your cancer went away and you're fine, we can rewrite you another policy like that. But it has to be about 4 years cancer free. Like the guy in Tupelo, he has to be 4 years, no treatments, no medicine for cancer, nothing, and then we can write him another one of the same policies.
Wow.
And so
now
that's something to think about. That's why people want to get more. Like, so for you think about how much you got, and if something happened, you think you want to get 8%, but you really want them to have more, you might want to think about getting increasing your death benefit, increasing what we have to maybe another 100,000 or another 250,000. That's what a lot of people do, and we can increase it if you want to increase that coverage. That way you have access to more money. Or
and that's what I was going to ask you about.
Now let me tell you this little strategy. There's another strategy we do. Okay. Term. A lot of people don't say, well, I don't want no term. But term insurance has its place. When you want a lot of coverage, you can get term, same what you got, living benefits, cheap. So yours is a permanent plan, so it costs a little more. But I could write you a $500,000 term, and it'll probably be about the same price as what you're paying for what you have, because term is so cheap. And that's something to think about if you want to get a lot of coverage, and we can lock that term in for the next 30 years. 30 years, a long time.
So explain to me what term is
Okay.
comparing to
It's
the
like
policy.
renting. It's like you renting insurance. It's not going to earn no cash value, but if you have an accident or something where you end up in the hospital, instead of pulling money out of your retirement plan, we could take it from the term. And then you can get your 80%. It'll be 80% of that 500,000. I mean, and you still got the whole other policy to leave your boys when you pass away. Term is so cheap. I'm about to shoot you a quote on 250,000 or 500,000 or $1 million. You'll be surprised how cheap it is. And you still got the living benefits. You got all the other benefits. It just do not earn cash value. And in 30 years, the price is going to probably double. And if you don't pay that double price, then it'll go away. You don't get no money back. It'll just go away. If you never have a cancer, heart attack, stroke, and you never pull money out, it will go away. That's the only thing about term. It's like renting a house versus buying a house.
After 30 years,
yeah,
if I haven't used it, it just goes away.
It goes away unless you pay the higher premium. They're going to send you a letter and say, for your next month, your premium is going to be this amount, which is double what you was paying. Most people be like, most people in 30 years, they're on fixed income, or they ain't working, or they can't afford it. But if you can afford it and you pay it, hey, you ain't missed nothing. You still got your coverage, and you still got all your benefits.
Wow.
So, and the thing about that is living benefits, cancer, heart attack, stroke. Most of the time, people suffer those illnesses when they get in their 60s and 70s.
Yeah.
So if you think about it, if a person buy a term in their 30s, 30 years, they 60, then they don't pay the high premium. They ain't got no insurance. Now, a year down the road, they get cancer. They should have kept that policy. Even though they would have had to pay a little more, they should have kept it. Because that's when they need it. Then they could have got 90% of their money. They would have got all their money back. So it's really, the insurance companies are smart. Don't think that they haven't thought about this, about how we can make all this money off this man and then not have to pay for it when he die. That's term insurance. You got people, take my husband. I use my husband. My husband is 72 years old. And he bought a term when he was in his 40s. It's going to mature next year. It's going to go up. And it's going to go up so high he can't afford to pay for it. He ain't going to pay for it. And if I don't step in and pay for it, he'll lose it. And I hadn't decided if I was going to pay for it or not, because I'm not the beneficiary. His kids are the beneficiaries, so why should I pay for it?
Exactly. Well, let me ask you this. How long do that term last after that, when it matures? How long will they give you to go ahead and pay it? A month?
30 days.
Woo.
30 days. That's it. And that's why so many people you hear about, man, I can't believe he didn't have no insurance. And people talk about you too when you die and don't have no insurance. But it ain't that he never had insurance. He probably had a term. See?
Wow.
So, and see, a lot of agents don't explain it like I'm explaining it. They don't explain what happens with the term. Term is good if you're trying to pay off your mortgage. Like if you got 15 more years on your mortgage, and you think, man, what if something happened to me? I don't want my wife to lose the house. So you go on and come to me and let me write you a 15-year term. And let it be from a little bit more than what you owe on the house. That way, if you die before the 15 years, your wife will get that check. She can pay the house off if she wants to. Okay, so that's what term insurance is good for. It's good for credit and to secure a loan.
Oh.
That's why they make you get insurance on them loans. When you go to the bank and get a loan, they put insurance on it in case you die. Then they say, well, we're going to get our money because we got insurance on it through this loan. Yeah. That's what that's about. So there's nothing wrong with a term policy. There's nothing wrong with mixing it. Like you would be perfect to mix. Leave the one you have like it is and let me write you a term, locked in for 30 years, a big amount. If something happened to you, hey, your family is going to be sitting real good. And if something happens to you that you don't pass away, you'll be sitting good because you'll be able to get that money. We'll let you get it while you're alive. If you get cancer, or heart attack, stroke, bad car accident, anything that happened, pull money. We say pull money from the term first. You can pull money from both of them, but we always say, well, since you want that one to be for your retirement, pull money from the term, because the term is going to go up anyway. After the 30 years, it's going to go up or go away, whichever one you decide. So you might as well use it. And we say go ahead and get the whole 90%.
The whole 90.
Something happens.
The 10% will be too big.
The 10% will still stay in there, and your price that you're paying will go all the way down. And you'll always have that. They can use that to bury you with. And since you got that big 90%, hey, if you want to give your boy something, go ahead and give it to him. Give it to him while you're alive. That's what I told my husband. I said, if you want your kids to have anything in this house or anything, any part of this land, you better give it to them while you're alive. Don't wait for me to give them anything, because I ain't giving nobody nothing. Don't make me be out to be the bad guy. If you want them to have something, give it to them while you living.
Yeah.
And that's the way I look at it. Give it to them now.
Okay. Now this is some good info that we getting. I like it. I love all the information. Something we most definitely need.
Yes.
With I guess the beneficiary. Yeah. With that right there. Can you tell me, if I'm not a family member of that individual,
mm-hmm.
how hard would it be for me to get that money if I am a beneficiary?
Oh, it's not hard at all. The beneficiary can be anybody you want to be. It ain't hard. You would need to still have the death certificate. And most time, if family members find out so and so is the beneficiary, they don't want to give them the death certificate. You don't have to. You can go to the funeral home and get a copy of that death certificate.
I was just gonna ask too.
Yeah, go to the funeral home and he'll give it to you. Let them know that you are the beneficiary, and the funeral home don't care as long as they get paid. Even if the family already paid it, the funeral home will still give you a copy of that death certificate.
Really? So
yeah, and then
would you have to show them anything? Anybody
can get a copy of your death certificate from the Jackson if they tell them why they want it. I'm the beneficiary, and they need to send a little copy showing that they are. They can get that from the insurance company, because the insurance company wants to pay. They got to pay that claim. So if you are the beneficiary, you know you are, then we will give you a copy of what you need to get that death certificate.
Okay.
And a lot of times people, they think they might be the beneficiary or something. Then all you need to do is call the commissioner in Jackson, give them the loved one that passed away, give them their name, birth date, social security number, and they can do a search. Give them your social security number. They can do a search to see if you were the beneficiary of an insurance policy. The insurance company not going to call you and say, look, we got some money up here for you. They're not going to do that. You have to call them to find out if you are the beneficiary. There's a lot of insurance companies got a lot of money that belong to other people that people never know they're the beneficiary, and they'll never get that money. That's just how it works.
I'm trying to get somebody in here because I think they got a question I asked. Let me see.
Okay, I'm going to put my number in the chat if anybody want more information about life insurance or for a free quote.
Yeah. But we're going to let you go ahead and I'm trying to see. Okay, he got kicked out. That's what it was.
Right.
Yeah. Yep. Because this right here seems to be a conversation we, as in, I don't know nothing about white folks. The only thing I know is about black people.
Right.
We tend to dodge and run from.
That's true.
What for? I don't know.
Yeah.
As much as we get murdered and killed, and
I know it. I tell you, I'm telling you, that white people. Since I've been in the business. I've been in this business 6 years, and they know all about it. They get it. They always have. And even before I got into this business, I worked in a bank. You know, Kevin, I worked in banking for over 10 years, and I always see them coming in with them checks. They always got a check to deposit, and it was from an insurance company.
Insurance, yeah.
That's how they get ahead. It's not that they make a whole lot more money than we do. They have insurance on everything. everything.
Everything. Yeah.
Yeah. So that's how they get ahead. We take losses. We always losing. We get in a bad car accident, no insurance. So we can't get a car fixed. We get sued because we messed up somebody else's car with no insurance. I know a lady in Holly Springs, her grandmother died and left her this house. She wasn't paying the house paid for, so she didn't have no insurance on the house. House burned down. Then the rubble, the city of Holly Springs, ended up tearing down all the rubble and moving it because it was such an eyesore. And then they sued her. Now they own her property. They got a lien on her property.
Wow.
So she just lost all the way around, simply because she wouldn't pay $400 a year for a homeowner's insurance with a company, with State Farm or anybody. $400 a year is not a lot of money.
$400 a year? No, it's not.
She could have paid that every year with her income tax. She could have set it up, or she could have paid it with her taxes every year.
Yeah,
there's always a way to do things. Like I tell
people, year out of a month, $400 out of a month, you paying what? That'll be what? Less than $50?
Less than $50 a month.
Yeah, less than $50 a month.
And everything for her has just been going downhill ever since. You go from being rent free, go from not paying nothing to where you live. Now you got to be paying $7,000, $8,000 a month rent if you're living over here in Tupelo. Rent is so high. It's like they want to run the poor people out of town. There's no low-income places to live around here anymore.
Yeah, I know, right?
Yeah. So you have to try to be more savvy with your money. And we make money. We spend our money on everything else, what we want. We just got to be more smart with our money, invest our money in something that's going to help us in the future.
Well, we tend to not to do that, but I think some going to look at that and be like, okay, we're going to hopefully the couple little people we have on here listen to this and be like, man, I think I'm gonna go ahead and give me some insurance because it's about right, because it don't cost much to do the insurance.
It doesn't. And you can always start with the term also. That's another thing. The term is cheaper, so it's better to have something than nothing. Start with a term, and then when you get your finances better, we can convert it to a whole life.
Yeah. And anything beats nothing. I tell you that right now. Anything beats nothing.
Yes. Now, another thing I would say, if you smoke, if you use tobacco products, you need to really think about getting your life insurance before you turn 40, because tobacco users, after you turn 40, it is so expensive. So, but while you're in your 20s and 30s, if you smoke, it's cheap. It's still low.
Why is that?
I don't know. It's like the mortality rate. Once you start getting 40 and over, smoking really damages your health. So they got that figured into the price, that your mortality rate, if you're a smoker. So if you smoke, you need to go and get you some insurance while you're young.
I figured they would charge more as a child. We don't use ride service. We rather drink drunk. Oh yeah, drink and drive. Yeah, drive drunk. Yeah, that is true. That right there is true. A lot of people tend to rather drink and drive and use driving service, because white folks, I do a driving thing. They use driving service for everything. They're not finna go drinking and driving, even though I will always say white people are not finna get stopped for nothing.
Well,
and
it's just being smart, That's just that costs less than a ticket, less than a DUI.
Yeah, it does.
Mm-hmm.
And trust me, I've had plenty of them get in my car and say that. They will say, man, I'm glad you came pick me up. I pick them up from the bar, and they know they're finna do some drinking, heavy drinking.
Yeah. Well, that's smart. I know my dad was a heavy drinker, and he always said, You know, when you drinking, you know what you're doing. You know you drunk.
Can you see the
know
chat?
that you shouldn't be driving.
Melody, can you see the chat?
I do. I see it.
I think Cedric asked you a question.
Okay. I don't see the question. I'm in the chat.
I think you're in private. Look on comments sometimes.
Oh, I see. Oh, here we go. Okay. Any occupation that has a high premium. Well, as far as can he hear me? He can hear me.
Yeah.
Cedric can hear
Yeah.
me. Well,
Yeah,
we do ask about where you work, and the only occupation that I've seen that they would put a rater, or they would rate it. They call that rating. Would be if you a coal miner, or you know you got a dangerous job. Police officers do not get a high premium because their job. You would say their job is dangerous, but no, because they're trained. Firemen, they're trained. As long as you're trained to do your job, it's not. They don't rate you. You don't get a high premium. No. Now skydiving, those dangerous people that do those dangerous hobbies like skydiving. Yeah. If you are a avid skydiver and all that, they will rate you. It won't be so high that you can't afford it. They'll just rate you. It'll be like $20 more than what it would have been. Even they even ask you if you fly, into other countries.
He said, how about truck drivers?
Oh, truck drivers. My specialty is truck drivers. No, truck driving is not an occupation that they frown on. No. I write a lot of truck drivers. My husband is a retired truck driver. So I have a lot. I've never met a truck driver after I did my presentation for him that did not get the retirement plan, life insurance plan that I offer at Transamerica because it's so good. Most truck drivers make good money, but they don't have a lot of benefits on their job. So we have a great plan for truck drivers to earn you some cash value for retirement. You'll have those living benefits available to you if you do have an accident, and the premiums are affordable.
Yeah. How about we got kids right now that are in their 20s? Do y'all have anything kind of like the one for the children that you were talking about?
In their 20s?
Yeah.
Oh yeah. I wrote two of those. I wrote some policies like that for your relative, for Brad's boys, young men.
Young men, yeah.
Mm-hmm.
Brad, okay. How about? I guess, do y'all have any plans that are extremely high?
Extremely high.
No. We would say because right now the plans that you've been giving us, they
everything is reasonable. It's just it all depends on how much. We'll write up to $10 million. So it goes by your age. If you want it to be cheap, then you need to get it when you're young. You can get $2-5 million. It'll still be reasonable if you're young, 20s, 30s, 20-year-old, 30-year-olds in their 30s.
And that never goes up.
I can show 30 people in their 30s how they can have $500,000 cash value that they can get by the time they turn 55. Especially if they willing to pay $100 a month. I can show them how to do that if they are willing to pay $150 a month. How much money you want to have when you're 50? What do you want to do when you're 50 or 55 or even 65? You tell me, I can build you a plan. I got a lady that said she wanted to be able to just get this certain amount of money, and I told you I need you to pay $300 a month, and she's paying it. And she was going to do that.
Nothing else to do with her money. I don't see nothing wrong with $300.
So for 10 years, do it for 10 years, and then her payments will stop. She'll have a big pile of money that she can get when she want to. She got the living benefits if something happened that she don't die, but she need money. She'll be able to get that. And so she's done. She don't have to pay no more life insurance. And we still going to be paying her interest every month, just like she was making that $300 payment. And the reason why the company is able to do that is called the time value of money. Money today is worth more now than it's going to be worth in the future. Think about it. Inflation. $300 today is worth a lot more than it's going to be worth 10 years from now. 10 years from now, $300 is not going to be $300. It's probably going to be only $150. The way inflation is. So yes, the company, they taking her $300, putting it with a lot of other $300, and they invest in it. They making money off her money right now. So that's how they're able to pay her in the future.
I'm loving this conversation. About ready to get up out of here, Melanie. I want you to leave us a closing. Tell everybody where they can reach you at. I got your phone number set right there. Give us your Instagram, email, whatever type of social you're on.
I'm gonna type it in the chat. My name is Melody Harris. I'm the Associate Director for Transamerica. My email address, I'm gonna give you my business email address. And I mean, just call me. You can call me anytime. I work all the time. I'm always at work. I work on the weekends. If you need me to come to you and do a presentation, or we can do a Zoom call like we're doing now, I'd like to do a presentation with you, with family members. You got some, I like couples, husband and wife. You get me 2 couples and you and somebody else, and we'll go out to a steak dinner, you know, just to talk about finance. Talk about how we can build wealth.
Wealth building.
We call them lunch and learns, you know. So that's something that I like to do. So, and again, my number is 662-322-7423. My passion, that's my passion in this business, is to help people, you know, protect their assets, protect their income while they're working, and then to also build tax-free retirement.
I think you put your chat in the private chat. You're going to have to go to comments and put it in there. Click on comments and do it like that.
Okay.
Yeah, you put it in a private
okay,
chat.
I did. I see comments.
Yeah, click on
I'm on comment. I see everybody else's comments, but how do I type into it?
Should go down to the bottom and be able to do it. Right there where your avatar is. You see it at the bottom right there where the chat's at? Your avatar ain't on there?
I don't even know what you mean by avatar.
Something that's gonna look like, well, I ain't got one myself, but it's gonna look like that right there.
Oh, okay.
But it should be at the bottom down there.
Yeah, I'm looking. I'm trying to scroll down the screen.
It should say post a comment.
Oh, okay. I don't see it.
Yeah. All right, my people, we don't have some good game here. Now, the question is, are we going to sit back, get this information, and just snub our nose at it? Or are we going to sit back, get this information, and do what we need to do, and leave our loved ones what we need to leave them? Show them how much we really love them.
That's right.
That's on us. That's on us. We can't blame nobody else in the world if we don't leave our loved ones what we need to leave them. We don't need to leave them our problems.
That's true.
Let's leave them some type of wealth.
So generational wealth. We can do it.
Yeah, we need some generational wealth to wealth build continue. Yeah. This is how we start right here, people. Right here. We start right here. Unfortunately for us or for me, we won't be here to see it, but at least we'll know, okay, I left this. So
well, and you know, and so it's good. What you can do while you are here is talk to them about it. Let them get involved. You know, we don't have to look at death. You don't have to look at a lot of people say, I don't want to talk about life insurance. That's about death. No, death is not supposed to be something scary or something that you don't want to talk about, especially if you're a Christian, you know.
No, right?
You know, so we shouldn't have the knowledge to know you're not here to stay forever. So you need to talk to your loved ones while you're here and get them involved. Let them know what's important. Let them know what they're supposed to do. Let them know what you expect even after you're gone. Most business owners, I write a lot of business owners insurance. Most business owners They want to leave a legacy. When they pass on, they want their business to still be going. So they talk about it and they put something in place so their business can keep going. So we have a lot of the same plan we do for business owners. If you got a key person that work for you, that help you open and close your business that you depend on, did you not know that you could get a policy on them and your business is the business owner and the beneficiary of their policy? It's perfectly legal. Your business is going to pay the premium. But if something happens to them and they pass away, it's going to cost you a lot of money to train and hire somebody to replace them. So your company will get that money off of their death. It's called a business continuation plan.
Same thing that Walmart and all them other companies do.
Yeah. If you got somebody that work for you and you care about them, hey, you can get a policy on them. And the company pays it. And when you get to collect that death benefit, if they pass away, you don't pay taxes on it. Your company benefits from it because your company is going to suffer from that loss from them passing away. So you're going to have to, it's hard to find good people. So we all know that it's hard to find good people to work. So that money that you get from their death will help you to stay afloat and train. You know, you might have to pay them a little bit more than you were paying this person. So you can use that money to do that, to keep your business going. Calvin, this is a great thing that you're doing. I appreciate you for inviting me, and I hope you invite me for future.
I'm gonna bring you back on probably again sometime next week. Probably next week. Okay. You know, hopefully we have more questions because I'm quite sure it's gonna be somebody who watched this that I know, you know, want to ask the question and kind of scared to ask the question or whatever. This and that.
Yeah, get the word out that you're gonna be on. Put it on your Facebook page or something.
I don't be on Facebook all that much.
So you're not okay.
But you know,
all right. Well, this has been great, and I appreciate you having me on. I got to get back to the office, and so share my number with them, Calvin, and you can share that email that you have with them. Since I was unable to get it on here, if anybody needs to email me any questions, I'm happy to answer the questions. But they can send me their email. I can send them some brochures. We have a lot of brochures, and I can send you some literature from Transamerica on the product that we've been talking about, the Index Universal Life product. That's what it is, an Index Universal Life. And it also has living benefits. And so if they send me text me your email address, I'll send you a brochure on that. Okay?
Mm-hmm. Sounds
all right.
good.
Thank you.
All right, my people. I'm loving y'all. Hoping y'all get the information. Pass it on. This is Calvin from CMO TV, and I see your ass when I see you. Peace.
Bye-bye.